day 4. Give yourself a round of applause for making it this long. Because I know how these things go. We've done, man, I've lost count. We've done Keo, Greystone, Charles. How many events have we done? A lot. But I kind of know how they go. You know, you're sitting at home, you get an email like last week, and oh, Tier 1 Trading, they're doing an event. Yeah, I'm going to sign up for that. So you click the sign up button, and the day finally comes around. It's day 1. You come in, you're like, I'm going to learn some cool stuff. I'm going to learn a strategy, going to buy and sell, going to make some money. It's going to be fantastic. And then Akil comes in on Monday, starts talking to you about the language of the market, teaching you about structure and stories that are told within the candles. And all of a sudden you're like, whoa, there's a whole new world of trading out there that I never even realized. You've been looking at a chart for so long, and now all this new information starts popping up. You're like, this is pretty cool. And then on the second day, Greystone comes in. He starts talking about rules-based trading. Some of you guys may have never even heard of that. Some of you guys are used to pulling up on CNBC and getting a feel for how the market's moving that day, and, you know, buy, sell, not really knowing what you're doing. And so you hear about this rules-based trading stuff and coming up with a strategy, and he walks you through strategy development and the step-by-step process. And you're like, hey, that makes a lot of sense. That's something I should probably start working on. Then you come into day 3, and Charles just like brings the fire yesterday and goes and shows you risk-reward ratios. And he's talking about money management strategies and position sizing and showing you how you can accelerate growth and use fixed ratio, all these different things that you never seen before. But I could tell yesterday in the chat, some of the comments, it was like there were light bulbs that had been going off, but some of it was a realization that, man, I'm gonna have to change some stuff. I'm gonna have to put in a little bit of effort. I'm gonna have to do some testing. I'm gonna have to create some rules. The belief is there. Like, we've shown you, you see it. Everybody believes that they can do it, because trading, it's not complicated. Once you put forth the work and you come up with a rule set, you test your strategy, you build the confidence. So the belief is there, but you start to see kind of some obstacles in front of you. You're starting to see the work that's going to go into it. And so then you come in today, you get the email this morning, you're like a little beat up, you know, really feeling really excited on Monday. And then come yesterday afternoon, you're like, do I want to do this? It seems kind of tough. And so I got you today. But don't worry, because today's going to be an encouraging day. Today, we're going to show you what happens when you go through those processes. When on day 1, we talked about knowledge gaps and learning the correct way, and then putting forth the practice and going into the markets and drawing in new structure high, new structure low, and learning to identify structure. And when you put forth the work to create your strategy and refine your rule set, when you go in and you put forth the work to back test it, and you build your confidence, and you understand your numbers, you know what your performance expectancy is. Today is all about showing you what happens when you put all those things together. So the way we're going to do that in session 1 is I'm going to kind of talk to you about my story. I'm going to talk to you about what is probably the most effective thing that I've done in my professional career. I'm going to teach you a strategy that's really awesome. In session 2, we've got one of our tier 1 clients, somebody who's been in our community for a long time, person that started out just like you, started out with a vision of becoming a professional trader. They committed to it, and then last year ended up getting funded as a professional trader. And so he's going to come in, he's going to talk to you guys about what that experience looks like. He's going to provide some advice and guidance to those of you who are wanting to go down that route. And then in the third session, we're going to show you like an extremely clear path on how to get from where you're at to where you want to be as a independent, consistently profitable trader. We're going to lay all of that out for you. So it's going to be a big day. I think you guys are going to enjoy it. There's going to be a lot of lessons, and hopefully you'll leave feeling very encouraged and very inspired to take that next step and to do what you need to do. But in order to show you guys all of that, what I need to do is take you back in time to 2011. And at that time, at that time, I had been working on kind of that the strategy gap of my own. I had been training and doing my research, and I've been learning pattern recognition. In 2011, we're coming off the back of big economic drawdown, but the economy had started to recover. Everybody was talking about the trend. The trend is your friend, ride the wave, trend trading. And my personality is one that if everybody else is doing something, I'm probably going to be doing the opposite. It's how I'm built. It's my mentality in life. And that mentality came through in the market. So when everybody's talking about trend and trend following systems and that type of thing, it just didn't appeal to me. What I really liked, what appealed to me was when you would see the trend just collapse and immediately reverse the other way. There's something about that really caught my eye. And because of that, I started to trend towards pattern trading, kind of a counter trend analysis. It was part of the way that I was wanting to build out my trading career, my approach to trading. Was it yesterday morning or day 2? Greystone was talking about, trading is your business and treating it like a business and developing your trading style and building your time frame and, basically building out your trading so that it fits you. Because ultimately, if you're following somebody else's plan, if you haven't created a plan that fits you, that fits your mindset, that fits your time frame, your capability, then you're not going to be able to follow it consistently. You're not going to want to follow it consistently. And so that had really resonated with me. And that's why I started to gravitate towards that pattern type trading. And so I've been doing the research. I've been, building my reticular activating system, going through the markets, learning how to draw in my Fibonacci's, and I started developing my plan. And at that time, I was trading Gartley patterns. Okay. And for those of you who don't know, Gartley patterns is one of the well-known advanced pattern formations. It's a combination of 4 moves that uses just a consistent set of Fibonacci retracements and extensions to basically identify the pattern setup. And so that was my plan. I developed my rules and I was going through the market. And for those of you, like a couple times yesterday when Charles was talking about backtesting, there were questions about what is it? Like, how do you even do backtesting? Is that like a software that I load on my computer and then it like tells me what my performance is? Or like, what is that process of backtesting? And so I just wanted to kind of go through that because I think it really paints a picture of like where I was at and the process that you're going to go through and the benefits of doing it. So I want you to imagine it was 2011. I loaded up a chart and I'm looking for Gartley patterns. Okay. You go back in history, you got your hard right edge, and you basically just start walking the market forward, tick by tick, candle by candle, and you're looking for whatever your rule set is to develop. Okay. And so at that point, I was looking for Gartley patterns, and what I saw was something like this right here. Okay. And so I'm not going to go into like the complete specific rules for Gartley's, but just so you have a concept of what it is. I was looking for an initial move, which is our X to A leg. Okay. This is down here would be our X, up here would be our A. And then you look for an A to B retracement down into a 618 Fibonacci retracement. Okay. And then after that, I would look for another 618 retracement. Okay. Which we had gotten like right here. And then I would look for a 786 retracement from the A to the D point. So right down here at this 786, that's where I would have entered. And then boom, the market pops off of that. And that would have been a winner for me. All right. So as I'm going through my back testing, I'm going bar by bar. I see this. I got my spreadsheet open like Charles was showing you yesterday. I put in my entry. I put in my stops, my targets, where I got in, where I got out. And I'm recording that data. And then I finish that one, delete it, and I start walking the market forward. Okay. And I'm going through bar by bar, looking for setups. And then I end up seeing like something that would look like this. And I see this just massive candle, this huge move, right? And like I said a couple minutes ago, my contrarian type mindset, the whole going against the trend. When I see something like this, it just, you know, it it tickles something within me. I'm like, that's what how do I get in like right there? That's what I want to do. I want to be the guy that figures out how to get in right there. And that's kind of what started this discovery process, right? So we talked about knowledge, and then knowledge plus discovery equals power. That was on Monday. And so at that point, I had a little bit of information, I had a little bit of experience in doing, pattern trading, but I had this desire to kind of go against, what was considered the conventional wisdom at the time. And so I started developing a rule set. I wanted to see if it was possible. Can I create some type of specific strategy or rules that would allow me to, identify this before it happens, right? Because if you don't see it until it already happens, it's not that doesn't really help us much. So how do I find it right here? How do I know? Is there a way that I can know when I'm looking at all the information that's available right here? Is there a way that I could enter right there and catch that nice move? So what I'm going to show you here is what I started coming up with. So started with kind of like the Gartley pattern. It's going to end up being a combination of 4 moves. Move 1. This is what we call our X to A leg, right? Or it's sometimes referred to as a impulse leg. And the next thing that we were looking for would be leg 2. This is our A to B leg. This was going to be a retracement. And then 3, B to C move. And this is where it gets interesting. Yeah, I can make it bigger. 1 second. Make the font a bit bigger for you guys. So again, kind of with the my contrarian mindset. With the Gartley pattern, the moves were all contained within that initial X to A point. And in my mind, I was like, well, what if we don't contain it? What if we allow ourselves to kind of change things up a bit? And what if we move to, like, what if we extend past that initial impulse leg? Zalman says, being a contrarian is awesome, but if everyone's a contrarian, then what am I? It's a metaphysical question. I don't know. Then you're normal again, right, Keel? Yeah, so let me make this one bigger. So my theory was like, okay, what if we did something where it was like, the Gartley pattern, we had our X to A move, and then the A to B was contained within our X to A point, and then B to C, and then C to D. So that's what everything looked like up until the point where I was at. And I thought, well, what if we allowed ourselves to do something that looks kind of like this, where we did our X to A move, and then we got our traditional B to C move. But then what if we broke past that previous structure right there? What if we did something like that? Okay, what if we allow ourselves to go beyond what is currently accepted, right? And so that's what I did. With my B to C, I actually allowed for a break of structure here with our X to A point. And then what I finally ended up doing was an additional retracement with another break of structure. So this looked kind of completely different. We had our initial impulse leg, which is right here, our X to A point. And then we had our A to B retracement right here, B to C extension, and then our C to D retracement. And the way that I measured these was by using a combination of Fibonacci retracements and extensions. The Fibonacci retracements that I use are the 382, the 618, and the 786. So if you're taking notes and you're building out a retracement tool, whether you're using NinjaTrader, MetaTrader, TradingView, whatever it is, if you're wanting to practice this, the retracements that you're going to need are the 382, 618, and the 786. Okay. Then the extensions that I use are the 127 and the 1414. Okay. So the way that the rule set works is that we would have, let me just get rid of this drawing so I can make everything bigger, easier for you guys to see. Okay. So we would have our initial move, X to A. Okay. Then what I needed to see was a minimum of a 382 retracement. So if we're looking at it here, it would have to be at least a 382. It's got to touch a 382. And then it could not close beyond the 618, right? So in this case, we're looking for like a bullish pattern. So it can't close the B point. The candle cannot close beyond the 618. Now it can wick down past the 618, but it cannot close. Okay, so that's important. On Monday, Akil was talking about the story that happens within candles. And because of what we know about the story, we put that very important qualifier or filter on that 618 point. Okay. So that's what we're looking for is minimum of a 382, cannot close beyond the 618. Okay. So I'll just draw it in like right there for this example. Okay. So that is our A to B move. Okay. After we have our A to B move completion, then we're going to look for a continuation of the trend, right? So we're going to look for a break of structure that goes up here. And the way that we measure this is that we're looking for at least a 127 extension of the X to A move, okay? At least a 127. And just like our 618 rule, it cannot close beyond the 1414. It can wick past the 1414, but the candle of that top C point cannot close beyond the 1414. Okay. So we've got our first impulse leg. We've got an A to B retracement that comes into at least the 382, cannot exceed the 618. Then we get our continuation move, which is our third leg, and it completes our C point at least a 127. And it cannot close beyond the 1414. Once we have all three of those criteria met, then the last thing that we're looking for is a retracement down. And it's going to come into a 786 retracement of the X all the way up to the C point. Okay. So wherever that 786 retracement comes in, that's where our entry point would be. Okay. That's our D completion point. So right here, that would qualify as a valid Cypher pattern. Okay. So that's kind of what the rule set had looked like. That's the rules that I had created, right? Very specific. It was something that I could write down. I could go back and test. I could verify it, see if it was repeatable, and then I could collect data on it. And so that's kind of what I started to do, right? What I found was kind of interesting. In the beginning, I had done, it was like 10 patterns, right? I pulled up, I think it was a Euro USD chart, was the first one that I had ever tested. Once I had completed the rule set, it's like, okay, I've got something that I can work with. Oh, one last thing. I forgot to tell you, I mean, probably one of the most important things. We talked about this on Tuesday. You said for every trade, what are 3 things that we absolutely have to know, right? We have to know our entry. We need to know our stops. We need to know our targets. Okay. So we know our entry is at the 786 point. That's our entry. In order to determine our stops and targets, the way I did stops was, again, going back to Monday, where we talked about understanding structure, understanding the like hidden messages that the market leaves inside of structure. It's the clues. We look left, we find out that there's key points where buyers and sellers are likely to congregate, right? So what I wanted to do is make sure that I had my stops. It was respecting a structure point, right? So if I'm entering right here, that's my entry point. Let me make this. We'll just go green. Okay, so that's my entry point. Then I want to make sure, looking left, where's my structure at, right? I'm wanting the market to go from here, and I want it to go up, right? That's what I'm wanting to do. So in order to place my stops, looking left, my structure point is going to be back here at this X point. Okay, so I'm going to want to make sure that my structure level is beyond, or my stop level is beyond my structure point, right? Because there's a possibility, and I'm going to show you this later. I was actually up this morning doing a little bit of day trading and had a perfect example of why we do this, and I'll go through it in a minute. But my stops were going to go 10 pips below my X point. Or if the pattern flipped around and it was a bearish pattern, then it would go 10 pips above my X point. Does that make sense? Chris asked, do I use ATR for determining? For the original rule set, no. One of the things when I was creating this, I was creating it knowing that I was going to be delivering it to other people. Okay. So I was, at the time when I was doing this testing, I'm working for a trading education company. Like that's what we do. We're teaching people strategies, developing systems and that type of stuff. So as I'm going through the rule set, I'm not only developing it for myself, but I'm thinking, okay, what questions are people going to have? How do I create a rule set that's so specific that I can hand it to 100 out of 100 traders and every single one of them will be able to take it into the market and repeat what I'm doing, right? And so I wanted to try to keep it as simple as possible. So what I ended up doing was taking a static, or basically just a standard 10 pip stop. That was the initial rule. So 10 pips beyond our X point, that's going to be our stop. Okay. Then to determine our targets, I use the same Fibonacci levels that we use to determine our A to B. So the Fibonacci would actually be drawn from the top, the C point, down to the D completion point. And for the original rule set, I used target 1 would be at the 382, and then target 2 would be at the 618. Okay, so that was the original rule set. Is that if you took, like when you entered, let's say you entered with a 2 lot, okay, then 1 lot would come off at the 382, 1 lot would come off at the 618. Now there's been a whole lot of variations. People have as they should, customized this strategy to do what they want to do. Some people, they get in, they take their entire position off at the 382. Other people have tested like a trail stop. Some people have done a target 1 at the 382 and a target 2 just below the C point. Okay, kind of respecting structure again. Because if the market moves all the way up here, like Akil was talking about, there's going to be some resistance right here, right? So instead of waiting for the market to get up there, maybe we get just underneath that main structure point, right, to take our targets, knowing what we know about structure and how the market reacts at those levels, right? So there's different ways that you can do it. Are you an aggressive trader? Do you want to take all your position at 382? Do you want to try to go for some of those really big moves, right? So if you take off at the 382, you're not going to catch some of the really massive moves, right? So let me just, with that in mind, and going back to our original example where I was like, man, I really wish I could create a rule set that was able to catch these, huge moves, right? So we created our rule set. And now if we start drawing it in, I've got an X to A, right? We've got a move that breaks through our previous structure right here, right? Got an X to A right here. Then we've got our A to B retracement that comes in right here. Hang on. Get the right tool highlighted here. Move this over. There we go. So we got our X to A point. We got our A to B retracement. Does it come in and touch 382? Yes, it does. Does it close beyond the 618? No, it doesn't. Okay, so what's the next thing I'm looking for? I'm looking for a 127 extension of my X to A point. Okay. Do I get it? Yes, I do. Okay. The entire move comes up here. Does it hit the 127? Yes, it does. Does it close beyond the 1414? No, it does not. Okay, so I've got condition 1, condition 2, condition 3. What's the last thing that I'm looking for? 786 retracement of my X to C point. And where does that come in? Right here. And so I take that rule set and I start testing, and I'm like, whoa, that's exactly what I wanted to see. Managed to create a rule set. So if we're in the market, right, at this point, if this is the hard right edge, right, okay, we've had our X to A, we got our A to B, we got our B to C point. So at this point right here, if this is live market action, the only thing that I'm waiting to happen is to see if the market comes back down to this 6-1 or to the 786. All right. I got my limit order resting right here. All I'm doing is I'm just sitting on my hands. I'm waiting, right? Waiting. Boom. I'm in. Okay. So entry right here, 786. Okay. Stop would go below 10 pips below our X point. Okay. So stops are going to be down here in this area. Respecting structure, giving the market some room to breathe. And then we look for targets. Traditionally, like I said, would be clean this up a bit. So traditional targets would be 382 and a 618. Okay. But like I said, if we have a lot of traders that customize their own strategy where it's like, if you take the 382 and the 618, or do you take the 382 and just below the C point, or do you do a 382 and then a trail stop? You know, there's all kinds of different ways that you can customize a strategy to fit what you're trying to do, right? But what I managed to do was create a rule set that would identify those times where the market is moving in trend, right? It's broken structure, it's going down, and then we catch these major reversals, right? So that's what I'd come up with. Started doing a little bit of testing. I think I had pulled I found 10 examples over the course of a couple hours, right? What's the size of the stop? So the stop is always 10 pips beyond your X point, but the size of the stop will vary based on how big the pattern formation is, if that makes sense, right? So if the entire pattern is contained within, if the X to C point is 40 pips, then your stop is going to be from, let's see, 720. Your stop is going to be a whole lot smaller on a lower time frame than if you're on a daily, if that makes sense, right? Does that make sense, Stephen? So the stop is always 10 pips beyond X, but what that entire stop is going to, vary based on how big the pattern formation is. Okay. So kind of going back to the testing stuff, I had pulled I think I started on, it was like a euro dollar 60-minute chart. I found 10 instances of this formation that had completed. And out of those 10, 9 of them were winners. And I thought, man, this is something, right? And so I thought maybe this has already been done. So I took it to my mentor at the time, and I'm like, hey, have you ever seen anything like this? Because he's the guy that taught me pattern trading. Like the stuff that I knew about it, I learned from him. So when I took it to him, I was expecting him to be like, oh yeah, I just haven't taught you that yet. But I take it to him, and he's like, whoa, dude, I've never seen anything like that before. Because again, kind of going back to the Gartley and the bats, all that stuff, we had not been looking at patterns that broke that initial impulse move. Everything was contained within that move. So the idea of just doing a continuation and a B to C that extended beyond that initial point, that was just completely new, right? And so he's like, yeah, man, he's like, I've never seen that before. And these are some pretty impressive results, but you don't build a strategy off of 10 instances, right? Yesterday, Charles was talking about, hey, go back and get 100. Get a decent sample size, because you might find that, the first 9 were winners, but then it went on a 20 loser streak, right? And I have created systems like that before. It was actually a Euro CAD strategy, and it was kind of a counter trend one. I think it was back in like 2013. I was working on this strategy, and at that time, the ATR for the Euro CAD, like the thing would just move in huge ways. And so I started doing strategy for that. I did 1 year worth of data on it, and it was killing it. I mean, absolutely knocking it out of the park. And then one of my other mentors, Todd, he was very much into systems development. And he was like, yeah, this is great. But he's like, you got to realize is that sometimes, depending on what's going on in the Forex markets, he said, you'll get into, times of the year or certain seasons of trading where market really moves in trends. So he's like, why don't you go back and let's go for like 5 years worth of testing. Okay. You've done 1 year, you've got a lot of examples, but I want you to go back another 4 years, pull the data for that, and then bring it back to me and tell me what you got. And so I went back and did that for this Euro CAD strategy. And what I found is that first year, incredibly profitable. The following or previous 4 years were terrible, absolutely blew the account. Like it was just, we had hit a certain point for that specific pair where market moved in trend. And yeah, I created a rule set that was really good for that. What I found when I actually extended my testing is that this wasn't going to be, favorable long-term. Okay. So making sure that you've got enough instances for whatever your strategy is, it's going to be very important, because one thing that you don't want to do, and we had a trader mention this yesterday, is he's like, hey, I've done some back testing data, but when I go live, I'm losing money. And so, obviously we didn't have the time to really dive into, his specific problem, but I would be willing to bet that either you don't have enough data, right? Or there's probably some psychological issue where you're a demo trading king, but once you get into live market and real money's at risk, then your psychology starts messing with you and you stop following your rules and those types of things. But I just want to kind of touch on that point where when you do your testing, make sure you go back and get enough data. Make sure that you're testing in times that economically are a little bit different. Maybe you started doing your testing when central bank changed their policy and all of a sudden they started just pouring money into the economy. And so everything just starts taking off because, hey, money's cheap and everybody's getting loans and buying stuff. And so the market takes off. If you start your testing at that point, but you never tested when the market hits a downturn, then you may get some unrealistic data, if that makes sense. Okay. So going back, I'd done some testing, sent it over to my friend. He's looking at it. He's like, yeah, I think you're onto something. Why don't you go back and do more testing? So I went back and did more testing. I had a 8-pair portfolio. I went back, tested on the 15-minute and the 60-minute time frame. So I would get a couple of different, analysis points. We had done the initial data, and it was, I think I was like mid to high 80s on win rate. I mean, it was doing incredibly well. So we had now had a very strong data series. We had a multiple pair portfolio. So he's like, hey, Dad, that's fantastic. He said, now what I want you to do is you've done all this data. You've put forth the effort to go back and back test it. You've looked for all the winners. Now what I want you to do is go back, do it all over again. And he said, this time I want you to only look for losers, because when we're doing our back testing, especially if we've created a system or come up with a rule set, we feel kind of proud about it. We want to be right as humans. Nobody likes being wrong. Nobody wants to be a loser. And so we have a way of kind of tweaking things in our mind. Maybe when I was going back and doing my testing, I'm looking at, a setup and, when I'm measuring it, sometimes what we would see is, you get an X to A and the A to B comes in and, it was 1 pip away from hitting the 382. But then I saw, it went on and hit the 127, the 1414, it came down to the 786 and boom, it took off just how I wanted. And so, technically maybe it didn't hit that 382, but you know what? In the real market, if I was trading live money, I definitely would have looked at that and I've been like, yeah, that's a valid one. I'm going to go ahead and take that. So as I'm doing my back testing, I'm going to chalk that up as a winner, right? That happens. It happens to everybody. Well, maybe not everybody. Happened to me, right? And so we have that tendency to be right. When we go back and do our testing, it's very important that we follow our rules. Yeah, or you overfit your data. That's another thing that I realized, Steven, is that when I was going through and creating the rule set, and then I would find instances when I'm doing my testing where maybe it closed just a little bit beyond the 1414, but it ended up going to the 786, and then it took off just how I wanted. And so maybe I need to tweak it, not a 1414. Maybe I'll go for a 1424. Yeah, because if I did the 1424, then I would have caught that trade, and then everything would have been fantastic, right? And so there's always that like desire within us to kind of tweak the rules so that our back testing looks really great, so we can show off to Pip Daddy on the forum and be like, hey, I just created a new system, it's killing it. Hashtag making money, right? But the question is, do you want to be right in your back testing, or do you want to be right when your hard-earned money's at risk? That's what you got to think about, right? Only show the wins. Yeah, right? Yeah. Yeah, so I would warn you guys against that. But anyway, going back, sorry, I'm getting off track, getting pumped about it. So he tells me, go back, do the testing all over again. Now I want you to look for losers. So I go back. I do all the testing again. 8 pairs, entire portfolio, 60 minute, 50 minute. Okay. And then what I find is that my performance wasn't as good as I thought. It was like 86, 88%. Went back, looked for losers. It was only 84%. And he's like, holy cow, dude. Okay. You're definitely onto something here. Okay. You went back, you looked for losers. Obviously you found a couple that weren't there, but you're still hitting, low, mid 80s. I think we got something. And so at that point, we took that rule set and we sent it off we had a mastermind group, right? So it was kind of, we talked about community earlier in the week and how powerful that can be to have a lot of other well-educated, like-minded people who are passionate about what you're doing, to be able to take what you're working on and get some feedback on it. So we took and we sent the rule set off to our little mastermind group. And I said, hey guys, here's what I've got. I want you to take these rules and go break them, basically put it to the test. In my mind, I wanted to be right. I thought I had done it right, but I wanted to make sure that, like I said, if I hand these rules to 100 out of 100 traders, they'd be able to take it and create the same thing. And so we sent it off. And there was a bunch of people, I think Akil included, because for a long time I'm sitting in Akil's live trading room, right? And he's trading, and he would have been like, right here. And he was talking about, he's probably looking at this and he's like, hey, yeah, we got structure point right here. Nice little double top. We're going to go short. I'm like, hey, Akil, you don't want to do that, man. You don't want to do that, because I've already had it measured out, right? I know that a Cypher is going to complete right down here. I was like, dude, don't get short. Don't get short. There's going to be a big old winner coming. And then boom, I was like, yeah, dude, I told you, dude. But at that time, he didn't know the rule set. He knew that I was working on something, but I hadn't shared it with anybody yet. And so I was just kind of messing with them in the room. Made for some good times. So once Akil finally got his hands on the rule set, he was like, yeah, I'm going to break this thing. I'm going to show Darren who's boss. Like, I'm going to take his little baby and I'm going to put its face in the mud. Right. And so there was a part of him that really did not want this thing to work. And I think he will admit to you that that's what I do. Push babies in the mud. Sorry. That was just the mental image that came to my mind. I don't know why, but I envisioned you like just wanting to, put me in my place. But anyway, so we send this out to all of our people, Akil included. They go out, they start testing it on pairs that I hadn't, I had that 8 market portfolio. They took it to different pairs. They took it to exotic pairs. They took it to crude oil. They took it to, pork belly futures. They looked at it in stocks. And what we found is that obviously performance is going to shift a little bit depending on your pair or your portfolio. But overall, the primary performance figures weren't changing very much. So maybe they were hitting like mid 70s on certain things. But what was cool is to see that there was a consistency among a variety of different portfolios, a variety of different investment, objects, that type of thing. And so what we found was that we had a solid rule set, right? And so then we took it out to the world and delivered it, and people have been using it ever since. It's pretty cool. What we find going through testing, another really cool thing that I kind of talk about with this pattern is that we noticed that not only does it catch some really big moves, but it also likes to stack on top of itself. So I remember, again, in the early days of my trading, I found, I'll never forget this one. I wish I still had the picture, but I lost it on a hard drive last year. Had a New Zealand dollar, I think it was a 60-minute chart, where there were, over the course of a couple of months, let's say it was about 3 months, there were 7 Cypher patterns that stacked up, one after another after another. So it was literally to the point where it was like you were taking profits on one pattern, and the pattern that, or the profits, the moves that were making your profits were actually setting up like the A to B leg of the next pattern. So let me show you exactly what I'm talking about, right? So looking at this, to the untrained eye, you just see a whole lot of chop, right? There's just a lot of back and forth. We see some big moves here and there, but if you haven't trained your reticular activating system, you don't see the story, or you don't see the hidden treasures that lie in here. But knowing our rule set that I just went over, let me start drawing in some things. So start right here. It's a move. A to B retracement. B to C extension. C to D completion. Okay. So we have X to A to B, B to C, C to D. Pull in our fib tool. So right here is the D point. Oh, hang on. Computer's lagging here. Okay. Oh, that's what I'm sorry. I'm hitting the wrong hotkey. Here we go. Okay, so 786, that's our D completion. We'd be looking for initial targets 382. So boom, targets. Okay, but now check this out. This is what's pretty cool. X to A to B, B to C, C to D. And so we have examples where we have our initial Cypher pattern, we enter, we hit profit, market comes back down, sets up another Cypher pattern, we enter, we hit profit, we move a little bit farther here. X to A to B, B to C, C to D, and we catch in these massive moves. And this just happens over and over again, right? But this goes back to day one, where we talked about learning the right way, having that knowledge, taking the knowledge into the market, which leads to discovery, right? We come up with this idea. Then we go into day two. We take the idea and we start to refine it. We create a rule set. We create very specific if-then syntax, something that we can take to 100 out of 100 traders. They'd be able to repeat it. Anybody could agree. That's a 382. That's a 618. That's a 127 extension. There's no ifs, ands, or buts about it. We take that rule set. We go back. We test it. We pull our performance figures. We create a money management strategy. Then what we have is a full comprehensive trading plan where I can come into the market at, what was it? It was 5 o'clock this morning, my time. I'm in middle America, right? Okay. As I'm preparing for this session, I'm also keeping my eye on the market. XA, A to B retracement, 382, didn't exceed the 618. Next thing I'm looking for, 127 extension, boom. Swing high to swing low. 127 didn't exceed the 1414. Next thing I'm looking for, 786 retracement. down into our 786 entry point right there. Okay? So let me see. I grabbed some pictures. If I was thinking, I would have just recorded a video, but let me just overlay this. So this was Euro USD. Bring that over. You guys see that picture? Just want to make sure. Sometimes when I share the screen, I just want to make sure it's not just okay. Yeah. So this was real time this morning, like 5 o'clock, 5:30. So saw that forming, decided to go ahead. I had my entry set, so it was a little bit before here. Like it was probably right around this point where I saw the pattern form as I was going through. So I set my limit orders, set my stop, and just kind of minimize the chart, right? And then all of a sudden I hear order filled. Nice little voice that NinjaTrader has, which tells you, hey, you should probably pay attention. Something's happening. And so I pull up the chart. I'm like, oh, perfect. Got my my entry. At that point, the market had kind of moved against me a little bit, right? So one thing that I haven't said yet, which is kind of unique with the Cypher pattern, is that when we measure, let me move this out of the way for just a second. When I'm measuring my targets, right? I use the 382, but so my entry was at 1736. So yeah, so my entry was like right here. Okay. But when I brought my chart up, found out I got entered, the market had already moved against me. Okay. So my initial target would have been right here at the 382. One thing that I want to make sure that I do is respect the movement of the market. Okay. So what I mean by that is that if the market moves against me, I want to adjust my fibs so that they're relevant, right? If I leave my fib right here, the 382 isn't actually the 382 of this leg, right? But the 382 is important. The fibs work. So we got to make sure that we adjust. So I move my Fibonacci so I cover that entire leg, and then I will adjust my target accordingly, right? So going back to the picture. So I got in, my initial target was a little bit higher. I adjust, move my targets, and then a little bit later, market popped off of that level, came up, hit my 382, took target. Then another thing that I like to do on ciphers, and I think most people that trade them do as well. Once target one is hit, we take our stops and I roll them just above break even, right? Yeah, Chris, I do. Once the target is hit. So, okay, before the target is hit, once we like when we are here, okay, Chris is asking, do I adjust my stops as well? The answer is not until target is hit. Okay. So once we enter, I've got my entry, my targets are set below my X point. Okay. I leave them there. Market can move back and forth. Once we get to this point and it hits my target one, I take that stop, I move it up just above my entry point. Okay. So now I'm break even. Now I can minimize that chart. I can go to sleep. I can do whatever I need to because I know that either the market moves against me and I stop out the rest of my position for a profit, or the market continues up and the second part of my position makes even more money. It's a great place to be at, right? That's one of the things. If you're doing a two target system, then that's a great trade management strategy that could be, applied to your plan. Now, if you're doing your entire position at target one, then that's not really relevant because it's, I would still modify your target area so that your fibs are in the right place, but you don't have to worry about rolling stops or anything like that, right? So, and what ended up happening is that the market hit that 382, bounced off the 382, came back down, took out the next part of my position or second part of my position. So easy money. Just doing that like in the background as I'm prepping for this morning. But just wanted to be able to show you guys a couple of examples. Let me go into, had one more we can take a look at here. This was yesterday. If I was doing the presentation yesterday, it would have been perfect because it would have been another opportunity. But this one we'll have to do in a historical perspective. But what we can see is like these big moves, they always catch my eye, guys. Like from the very beginning when I created the system, when I see something like that, I'm like, oh, I wonder what happened right before it. Well, let's take a look. This is what happened. X to A to B, Looking for my extension. Boom, right off the 127. Last thing I'm looking for, swing low, swing high, sweet 786. Boom, takes off. So that was just yesterday, about the same time that we were in the session yesterday. So example after example after example. And the beautiful thing is this pattern happens. Well, I can't say because I haven't tested every single pair and every single time frame, but I see this pattern happen a lot more frequently than most patterns do. So it gives a lot of opportunity. And like I said, we see it across multiple markets. On Monday, I think it was. Again, these days just kind of run together. But I think it was Monday that Akil brought up the Bitcoin chart, and it was just a textbook example of the Cypher pattern. So it doesn't matter whether cryptocurrency, foreign exchange market, stock market, futures, whatever, we see it. But you got to test. So once you figure out what your portfolio is, go back, go test it. So then one last thing I want to talk about. Once you have a set rules and you've got data and you've refined your strategy, then the cool thing is that you can start to improve your performance. You get to a place where you're now sustainable. Like ultimately, that's where we all want to be, right? We don't want to have, we want to be consistent. We want to be sustainable. We don't want to have gaps in our trading. We don't want to have major swings in our equity curve, like Charles was showing yesterday. We want to be steady, profitable, consistent. Once we do that and everything is sustainable, we can start making tweaks and adjustments because we're measuring our performance. We've got the data. We're seeing patterns emerge, right? We start this feedback loop where it all started at the beginning, where we get knowledge, and that knowledge becomes discovery, and that discovery becomes rules, and the rules become a plan, and the plan becomes performance, and the performance becomes data, and that data gives us more information, and the information becomes discovery, and you start going in this productive performance loop where you're continuously growing, you're continuously learning, you're continuously improving, and that's consistent. That's what we got to with this strategy. And because we were able to do that, we were able to refine the rule set even more, make it more efficient, and then systematize it. So then we got Anthony who comes in. And before that, there were plenty of like pattern recognition softwares that existed. And Akil testified to this. I tested every single one that I could get my hands on, and none of them were able to do what my eye was able to do. And that's not like a cocky thing, right? Like you just get to a point that when I kind of tell this, and I'm not even joking, I had done so much back testing on the Cypher pattern, so much testing that I was seeing Cypher patterns in the most random places. Like my wife was pregnant at the time, and she was in the hospital doing a sonogram and a checkup, and they had her on that machine that's like up and down, monitoring her heart rate and stuff. And like I'm seeing Cypher patterns develop in her heart rhythm, and I'm like, honey, your heart's about to speed up here in about 2 seconds. and I kid you not, like you just start to see it. It's crazy. But you get to that point, right, where it's like I don't even have to draw in fibs anymore. I can just look at a chart and be like, oh yeah, there's 3 Cypher patterns there. And somebody else is looking at it like, what are you talking about? I'm like, no, yeah, there's right there. You see that big movement? It's like right there before you got that, swing high, swing low, just draw it into, oh yeah. But you get to that point. So when I started using software and testing it, I'm like, yeah, they can't compete with what my eye can see. And then Anthony comes along and he creates the software for us. And he's like, hey, I think I got the software that can identify your patterns. And I'm like, okay, sure. I was like Akil when I gave him the Cypher rules. I'm like, sure, Anthony, watch me tear this apart. And a little competition, can't wait. And so he puts this together, and what I find, like, oh, I turn it on, flip the switch, like Akil was showing. You can add the Enigma software to your chart, and you can hit live or you can hit history, and it will go back and it will highlight every single one of the patterns that exist on any time frame. And it's a beautiful thing because back in my day, sounding like an old, back in my day, we had to draw them man by hand, right? But back in my day, we had to go candle by stinking candle, and I had to draw in every Fibonacci retracement and every extension, and it took time. So backtesting would always, like, people consider it a pain, right? And sometimes it is. But now, once you get to that point where you got specific rules and you've refined them to a point that you can't break them, then you can systematize it and it becomes super efficient. So now when I come into the market and I got my 8, 10, 12 market portfolio, I just click the button, and within 2 minutes, it shows me what patterns are there. It's a beautiful, beautiful thing. And the cool part is that one of you guys that's here with us today live is going to get a copy of it. So what it can do is it takes a skill set that used to take years. I mean, at least a year. I say when I started working on pattern recognition, I probably spent like 3 months of just learning, right? Like trying to memorize the sequences, the ratios for each pattern. And then from that point, I would start going to the market and I'd start like drawing them in and drawing in the retracements and stuff. And that probably took another couple of months. So there were a number of months of developing that skill, and the refining takes time. But now it's as simple as, clicking a button. So it would have been nice back then. Where were you in 2011, Anthony? Okay. Does it work on TradingView? No, Paul, it doesn't. And the reason why is they have TradingView has a Cypher tool, but all it is it's a drawing tool, which we actually have included in the Enigma is actually a drawing tool as well. So let's say you're wanting to train your eye. You can practice drawing in. And what you can see is like, so I started at my X point and then my A, and then it's saying, okay, well, at this point, it's met the criteria for the A to B for a cipher, right? So you see the cipher pop up. But then if I go here, well, no, it's not going to meet the cipher criteria unless it came down here. See those yellow lines that pop up? That's your 127 and 1414. So as I'm drawing it in, if I'm wrong, it's going to show me, nope, that's not right. That can't be a cipher pattern. But if you're doing Gartleys or bats, it will tell you. It will tell you exactly what it is, what patterns are there. It'll show you the ratios. So really cool piece of software. Show you live, show you historical, and it assists you in drawing. So really a very cool tool. But the TradingView is just a drawing tool. They're a web-based or a HTML5 based charting. And so in order to do the amount of like analytics that Enigma does, because it is really like an artificial intelligence. It looks at the chart the way my eye looks at the chart, which is fascinating. But in order to do that, it's got to be NinjaTrader, MetaTrader, because it's going to be on your computer. And so it's using computer resources. Do I personally use it in all time frames? Julio, you mean like, do I trade it on every time frame? Because that would be like impossible. But we've tested it on everything from like a minute chart to, a weekly chart, and you'll find instances of it on virtually every time frame. Oh, Stephen asked, which pairs and time frame do you recommend to start Cypher for backtesting? Well, I think that's going to vary per person. Like if the reason I say that, if you're working a 9-to-5 job, it doesn't make any sense for you to be testing on a 5-minute chart. Okay. Because realistically, you're just not going to be able to trade that. Now, if you are going to be a dedicated day trader and you want to do that, then 15-minute chart, those are great. You're going to see, instances of that. This one, this example that I showed you from this morning, that was a 5-minute chart. 5-minute chart is going to move pretty quick. So you got to be, your eye either has to be very trained to spot those patterns setting up, or you're going to have like the Enigma type software it's going to show you immediately. Once that C completion point is done, it's going to show you exactly where the D is. But I like I said, when I started doing it, it was the 15 and the 60. I think those are great because you're going to have enough instances that you'll be able to practice it, refine it, I identify multiple opportunities, and then in the real markets, it's gonna set up slow enough that you'll be able to take advantage of it. So I like that. There's a lot of 4 hours, a really good one too. 15, 60, 4 hour, those are good. And then as far as pairs go, I like the ones that I started on: Euro USD, pound dollar, New Zealand dollar, yen pairs. There's a couple of pairs that, yeah, Daryl, spread will eat you alive on a 1 minute chart. Yeah, you don't want to drop down that low, but there's a couple of pairs that I've seen historically that just like they just move a little bit different. So it's not that Cypher patterns don't work; it's that they don't exist or don't exist as often. One of those being EuroCAD. I think I tested EuroCAD, and it might be different now from when I had done it, but there were a couple of pairs, just like exotics, that because of the way that they moved, it was more trendy, and so you didn't see like the consolidation where you see a lot of patterns develop. So I would start with kind of some of the more majors. Aussie dollar seems to be doing a lot of them lately as I was going through for examples for this morning. But I'm running up on time. So any questions real quickly about that, or anything that we have covered throughout this session? Basically what I wanted to do, guys, is if you've never worked with fibs, if you don't understand pattern trading, please don't try to go out and trade this today. Okay, that was not the point of this session. What I really wanted you guys to be able to glean from this session was that when you do what we've talked about throughout the week, when you fill that knowledge gap, when you fill the strategy gap, when you fill the performance gap, this is what comes out of it. Okay. You build confidence in your system. You create a rule set that is testable, verifiable, repeatable, so that when you're in the market, there's no question about what you're going to do next. Doesn't matter whether the market's going up, whether it's going down, doesn't matter what the CNBC commentators are saying, doesn't matter what Pip Daddy says on the forum. You know exactly what you're supposed to do. You're like a sniper just waiting for the opportunity. And then you can perform with consistency. And then you can do like what Charles said yesterday, is develop a money management strategy to take advantage of that. Okay. Hopefully that's what you guys glean, that this is what comes from putting forth the work. It is worth it. Okay. Now, we're going to take let's take about a 10-minute break. After that, we're going to come back and you're going to hear from one of our clients that has an awesome story and has managed to do some pretty cool things. And I think it's going to be a huge encouragement and very inspirational for you. So let's take a quick 10 and then we'll be back. Thanks, guys.